good morning, everyone. I'd like to call the September 25th meeting of the Finance Committee to order. Members Covert is seeking to attend remotely due to a family emergency. Can I have a motion to, okay, we have a motion by member Selman, a second by member Plachowski. All in favor? Any opposed? Okay, that motion carries. I did receive a text from member DeCiani. He's having some childcare issues this morning. He'll be running a little bit late, but he will be here. And with that, could I have a roll call, please?
Member
Here.
Member Chavez. Member Covert.
Here.
Member DeCiani. Member Eckhoff. Member Garcia. Here. Member Hart. Member Krajewski. Member LaPlante. Member Ozog. Member Pachowski. Member Renahan. Member Rutledge. Here. Member Schwarzy. Member Salmon. Member Tornatori. And Member Zay.
Hey, thank you. We have a quorum. With that, we do have one person in attendance for public comment. We have Philip Ladner. He's just here for record of attendance, but he did write that he supports fully the election committee team who selected the winning voting machine. So thank you very much for your coming today. And with that, I will move on to my chairman's remarks. Oh, yes. Oh, you have public comment too. I'm sorry, we have other public comments.
The first comment was submitted by Peggy Lennon Brownlee. Her comment is as follows. Approval of the chosen Hart equipment is kindly requested. The second company in line may not ultimately be less expensive after researching ES&S. A company requested many thousands of dollars in support for 9 years just does not reflect good stewardship of taxpayer money. Furthermore, an antitrust lawsuit in 2009 led to this headline. ES&S machines are directly tied to significant undervotes at every level in Georgia, Florida, Texas, Arizona, Pennsylvania, and North Carolina. ES&S lied to federal lawmakers regarding data security and consistently demonstrated a dangerous lack of confidence. No to ES&S, yes to Hart voting equipment. It would be, in my opinion, considered dereliction of your duties to ignore this information. Thank you. End of comment. Next comment, Mary Hobian. I hope all is well with you. On Monday afternoon, September 27th, my colleague Peggy Meyer and I will be registering voters at the library. We will have the usual forms, but we will also be encouraging people to register themselves online. The attached form shows a QR code, which will be easy to use for people with smartphones. It also has the web address for people who don't have phones. Would it be possible for a librarian to be available to help people to use the public computer for this purpose? It would be especially easy if the computer had a bookmark. Thank you. End of comment. Next comment is from the same person, same message. Next comment, Donna Prepagel. DuPage County currently has outdated election equipment that is no longer supported by the vendor. By state law, it can no longer be used. There are only 3 manufacturers who meet the state's requirements for election equipment: Hart, InterCivic, ES&S, and Dominion. The DuPage County Clerk's Office partnered with the DuPage County Procurement Office to spend 3 months evaluating the options available. The team included subject experts from all parts of the election division. All 3 companies submitted bids for the 10-year contract. The team voted unanimously in favor of Hart's InterCivic. The initial contract bid, which did not include the continuing maintenance and other costs over 10 years, showed Hart at $10 million and ES&S at $5 million. If the ongoing costs were added in, it would be narrow but not close the gap. However, there is a huge difference in quality, and DuPage County is not exactly poor. All 18 members of the county board are also members of the finance. For the proposal to get out of committee and onto a vote at the board meeting requires a 2/3 majority, or 12 votes. For 2 meetings in a row, the 7 Republican members of the board blocked that vote. These delays are detrimental, as it will take a good deal of time for the election staff to learn the equipment and to train the 3,000 election judges. They made totally false claims about a lack of transparency and not enough time to get their questions answered. They all seem to be pushing for ES&S rather than Hart, using their concern for taxpayer money as the reason. There are numerous media articles about the problems at ES&S. As a voter, I need a ballot that is easy to read, not because I'm a poor reader, but because I do read. ES&S has a confusing ballot when I viewed it. HART, on the other hand, has 100% paper ballots. 100% made and assembled in the United States. Ballots are printed on demand, and all ballots are uniform, whether from early voting, same-day voting, or vote by mail. This is easier for voter education. The vote by mail, early voting, and same-day ballots are all sorted and counted separately at the election facility, not mixed together. Ballots are printed on demand. Currently, the county is required to print in advance ballots in the number of 110% of the registered voters in each precinct. Print on demand means that the ballot printed only as it is needed. This saves on cost and is better for the environment. What are the likely future costs of both systems? Are they a la carte or are they complete package? The HART Intercivic Verity System proposal is a complete package. The ES&S proposal would require substantial additional further costs, including paper for ballots, since the system requires exclusive use of ES&S paper, which could have price increases each year. Also, the ES&S system would not fit in the existing precinct supply boxes. New boxes would need to be ordered, which would cost an estimated $2 million more. Do the proposals include the cost of ballot printers? Yes. However, the quote from ES&S did not include quotes or list their top of the line printers. The printers in the quote from ES&S would be substantially slower than the printers included in the price of the HART system. Are the costs of the printers, paper, printing, and shipping included in the proposals? For our HART Intercivic, yes. The future costs of paper are not included in the ES&S proposal. Are the systems able to use existing poll books? HART Intercivic Verity integrates seamlessly with the no-wink e-poll books. ES&S system would be required to go through a lengthy certification from the Illinois state. It should be an easy choice. Choose HART. End of comment. There's another comment by the same person on the same subject. Shall I read it or? Yes, it's the same. Next comment by Philip Ladner. Comment is as follows: follow the findings of the advisory committee, avoid ESS. End of comment. Next comment by Marianne Vasquez. Comment is county board members need to research why ES&S should not be purchased. Just one small example of smartelections.org. Just a total waste of taxpayer money. ES&S is the largest vendor of voting systems in the US, was seeking to certify a touchscreen voting machine that counts votes with barcodes in New York State. The voting machine is called Express Vote XL website, and it lists the website. Security experts and good government groups say that Express Vote XL has a flawed design that makes it dangerously insecure and that it is also glitchy and overpriced. Many of them strongly oppose its use. Voters with disability have often struggled to use it. Emails obtained through public records request reveal that in May of 2019, the New York State Board of Elections halted certification of the Express Vote XL due to concerns that the state regulations do not allow its use. End of comment. Next comment from Emily Friel. Please support the purchase of the HART voting machines. They offer a quality product that is secure and is actually less costly than the alternative ES&S product when you consider all the costs involved. In contrast, ESS product has a poor track record of security and untrustworthiness. Our neighboring state, Indiana, terminated their contract with ES&S after an investigation revealed that ES&S violated state law, lied to election officials, and were responsible for errors that resulted in long wait lines, voter anxiety, and discouraged voters, and in general proved to be an embarrassment to the state. We really don't want to get ourselves into that kind of mess here in DuPage County. I work as a poll watcher and value the integrity of the voting process. We must believe the committee that evaluated all of the voting machine options. This committee chose the HART voting machines. Please respect the committee choice and select the HART voting machines. End of comment. Next comment, Patricia Rodriguez. Comment, say no to ESS voting machines purchase, say yes to HART voting machines. End of comment. End of public comments.
Great. Thank you so much, Dana. And with that, we move on to chair remarks. So first of all, I would like to congratulate member Hart and his family on the birth of their new baby boy. So welcome, baby Hart, a new member of our board here. So that's really nice. Congratulations. ARPA funds. So last week, Member Renahan and I met with staff to discuss the allocation of ARPA funds. Staff is reaching out once again to the elected officials and department heads to review their initial requests once more to make sure that, you know, everything in there is absolutely what they need. Once staff has had the opportunity to meet with all the elected officials and department heads, they'll work to group the request in categories. Once they have them in categories, we plan to have a special call later on this month. And we hope to have all the elected officials and department heads present either in person or via Zoom to answer any questions that all of you may have. Also, we continue to get questions about salaries and pay at the county. So as a reminder, we are in the process of conducting a comprehensive salary study for all the departments that fall under county board. We have set aside money in contingency fund to make the salary and hourly adjustments to pay as recommended by the study. And we hope to have that whole process completed by the beginning of next year. So staff is really working on it. We know it's important, and we want to have that addressed because we want to keep our employees here. So with that, I will move on to presentations. The first presentation we have is our 2020 audit by Baker Tilly. And Jeff, do you want to come up?
Good morning, everyone. It's my pleasure this morning to have our fiscal year ended November 30th, 2020 financial statements presented to you this morning, also known as our comprehensive annual financial report. Before I turn it over to Baker Tilly, I would just like to note on page 2, the opinion of these financial statements by our external auditor, Baker Tilly, states that based on our audit and the report of other auditors, the financial statements referred to above present fairly in all material respects, the respective financial condition of governmental activities, business type of activities, discretely presented component units, and each major fund in aggregate remaining funds. So I'm happy to note that our finance department is able to provide to you this morning financial statements that are unmodified by the auditor. This report includes over 100 funds that we report on annually, including our major funds, the general fund, Department of Transportation, Public Works, Stormwater, and the Care Center. So indeed, it is comprehensive. It was an odd year, to say the least. There was a lot going on, including the CRF fund, which we had to pick up and report on those, but I'm happy to include that now in these financial statements. So I will now turn it over to Joe Lightcap, a partner with Baker Tilly, who will go over more details of this report.
Thank you, Jeff, and good morning, everybody. I'll be going over at a very high level. If you have any questions, you've seen the reports, feel free to stop me at any time. Oh. Okay, so, and you can see the open discussion is last, but please, anytime. So these are the kind of the topics for today. We'll be going over the engagement team, the deliverables, the audited financial statements, and then the reporting and insights letter. Okay, can you go move forward, please? Thank you. So our engagement team here, this is myself, Joe Lightcap, and 2 managers on the engagement, Mike Ballot and Anna Wizawadi, and then the quality control partner, Jason Coyle. I think this is a very important slide. I send the board an email every year before we start the audit looking for your input. Again, here's my contact information. Should you ever have any questions, concerns, comments, feel free to reach out to me at any time during the year. It doesn't have to be at this presentation or during the audit. If there's ever any concerns, please let me know. We did begin our audit field work on March 22nd and continued throughout the following months. As Jeff mentioned, this was a unique year. So this presentation is a little later than it normally has been. But as we progress through the various challenges, the communication between Baker Tilly and the county finance department was strong, and we were able to stay on the same page and really kind of revise our timelines and our deadlines and work together to issue the unmodified report Jeff mentioned. Next slide, please. You can go to the next one. So there are two deliverables that I will discuss today, the audited financial statements and the reporting and insight letters. While these are the reports I'll be going over, we also issue a report, a standalone report for the Water and Sewerage Fund and the Circuit Court Clerk Fund and the ETSB Fund. In our audit over the county's federal awards, that'll be coming out shortly. And as I mentioned, the reporting and insights report is our report on the non-financial highlights from our audit. Next slide, please. So the county has once again issued a comprehensive annual financial report. So this is more information than what is required under the standards, under minimum standards. It provides some good information, transmittal letter, which is a good narrative from the county. In addition to that, in the back of the financial statements, there's trend information, 10-year statistical information, so you can see how the county has fared over the last 10 years in various financial information. Next slide, please. In addition to the audit, we also perform some non-audit services. We prepared the comprehensive annual financial report. We'll propose some adjusting and conversion journal entries, and we'll also prepare part of the data collection form. While we prepare these services for the county, management ultimately takes responsibility over the information, oversees our work, reviews it, and ultimately signs off on the end product. Next slide, please. As Jeff mentioned, we issued a clean or unmodified opinion over the county's financial information. It's the highest level of assurance you can gain from your outside auditors. Our opinion does not cover the airport authority that is audited by other auditors. I would direct you, if there's one spot in the comprehensive financial report that I would direct you to get an understanding of what happened with the finances over the year, it would be the management's discussion and analysis, which follows our opinion. It's written by management. It's more plain language than the rest of the report, and it's management's perspective on why things fluctuated over the prior year. So it's really the spot to go to see what happened during the year. With that, again, a very high level over the financial statements. If you've reviewed it and you have any questions over the numbers or what's in the report, I can answer those now. Otherwise, I'll be going to our other report.
Any questions from anyone? Okay, go ahead.
Okay. So as I mentioned, the reporting and insights letter is our non-financial highlights. Next slide, please. It satisfies a few different auditing standards, all in the one report. The first being disclosure, discussion of our responsibilities. So our objective is to provide the opinion on the financial statements and also to consider internal control over financial reporting as we perform our audit. Next slide, please. Management's responsibility is to prepare and fairly present the financial statements, to maintain internal controls, compliance with laws and regs, and also provide us with written representations at the conclusion of our audit, which are also included in the back of the audit results communication. Some of the qualitative, next slide, please. Some of the qualitative aspects of the accounting practices are disclosed. The county adopted one new accounting standard during the year. This was GASB 83, which mainly impacted the Water and Sewerage Fund for asset retirement obligations. Not the most material impact in your financial statements. So generally, your financial statements are pretty comparable to the prior year in terms of presentation and form. Accounting estimates, they were reasonable in all material respects, as were the disclosures, the financial statement disclosures. We had no difficulties in performing the audit. We did have one adjustment over the care center. I'll talk about that in a little bit. We had some past adjustments, so adjustments that aren't included, that were immaterial in our opinion, that were not included in the financial statements. The one on IMRF, which happens every year, and it's really a difficult one to adjust for. It's at the IMRF level, and then one with care center liabilities. There were no disagreements with management, no consultation with other auditors. You can see the management representation letter that I mentioned, and there were no other significant issues to discuss within the report. Yep, sorry, thank you. Okay, we can go to the next slide. These are our upcoming accounting pronouncements, the next one being GASB 84 over fiduciary activities. So in the financial statements, there's currently agency funds. So these are funds held on the behalf of others. Some of these funds will be rolled into the corporate fund next year. Some will stay in a similar presentation, but also have an income statement. So this will be a pretty big difference in terms of financial reporting as compared to the current year. We've had discussions with the finance department. They've spent kind of a couple of years ramping up to this, and will be well prepared to implement when it's time next year. And then following that is GASB 87 over leases. Again, we've had discussions with the finance department to kind of see how that'll potentially impact. That's a widespread county initiative. It'll be quite a lift for the finance department, but they're more than capable, and we'll work them through any intricacies of that. On the next slide for internal control matters. So when we start our audit, we look at internal controls to determine the nature, timing, and extent of our procedures, not to provide an opinion over internal controls, but if something comes to our attention that we feel the board should know about, we put that in the letter. Or if there's a potential for a material misstatement of the financial statements, that'll be in this letter. There was one new comment in the current year over care center adjustments that we made. This comment has been presented in the past. It's something that we focus on. It's one of the more complicated areas of the county's finances, but there is a comment regarding adjustments in the letter. And then there's a couple of repeat comments around the kind of bank accounts held by not the treasurer, and then some patient billing, accounts receivable comments at the care center. Again, they're a more complicated area and things that are being worked on to improve. I guess the next kind of slide is just kind of for your information on Baker Tilly and kind of the areas where we can be of assistance, or we might have alerts or information. And then finally, I'll open it up for any final questions.
Member Desart, go ahead, please.
Thank you. Thank you for that presentation. Appreciate it. When you look at internal controls, what does it mean on your slide that there's an issue with patient billing at the care center?
So being that it's a material balance and a significant class of transactions, so there's a lot of billing going on at the care center. We look at that, and it's complicated when they go out and they do the billing, and then they don't ultimately know what they're going to get reimbursed by the state or what's going to get paid by the patient. So this is more of a comment on the AR and keeping kind of more up to date and more current with what the actual balance is, who's going to pay it, and adjustments and write-offs to those balances.
Gotcha. Thank you. And it also, doesn't the care center also have their own audits? Their own separate from Baker Tilly?
The care center is the only financial audit of the care center is the one we do.
All right. Thanks, Jeff.
Mm-hmm.
Any other member Krajewski?
Thank you. Yeah, I wasn't able to open Jeff's link he sent Friday, so I was out of town, but I just wanted to focus. He just sent me the management letter. And, you did identify the liabilities expense overstatement within the care center is one of the issues. And then you did mention, I don't have last year's, but it seems to me in the past, we've always had the comments regarding in the management letter, the care center. And you made a comment, I think you said we have some of the same comments from the year before.
There were two comments that repeated, one over accounts receivable at the care center and one over accounts not held by the treasurer.
And I know we, in the past, go back several years ago, we had several repeat comments in finance, and those have been cleared up, and those are the first things you address for the following years, make sure you don't have those repeat comments. But it seems like we continue to have repeat comments in the care center. And, I would just like to find out from more our staff what we're doing, because I mean, that's the first thing you focus on is your management letter, your comments, make sure you correct those for the following year. You shouldn't have those comments again the next year. And then again, you shouldn't have them again the next year, but we seem to continually have everything else. We had some in the past with finance, they cleared them up. We don't have them. Back several years ago, we had several repeat comments, but those are all gone now. Good job, our staff finance it. But I don't understand why we continue to have the same comment year after year from the care center. We should be correcting that. I don't know why we aren't. So I think that's more not for you, but maybe you need to work with our staff to tell them how to address it. I mean, we overstated the liabilities here. I don't know what they did wrong, but we gotta make sure we don't do that again, because we need to get these off our management.
Yeah, Jeff is coming up, so.
One of the things that I can tell you, we have a new finance manager at the care center. And we're going to have an upcoming retirement here of the existing care center manager. And I've spoken with Janelle and her staff about having the new finance manager address some of these issues along with some other issues as far as reporting on time, reporting to the finance department and things like that. So we'll make sure that that's addressed in the upcoming year, which is, we've got a couple more months left in, but we'll try to clean those up and work with the care center.
Thank you.
One thing, it's my understanding that the link isn't opening. Mine does when I test it. If you go on the website, on the finance department page under financial reports, you'll be able to pull it up there. We put it on the website.
Great, thank you. Are there any other questions from anyone? And Member DeSanto, go ahead, please.
Yes, the care center, I know last year we were expecting higher reimbursements from the state of Illinois for the Medicaid reimbursements. Were those maybe possibly some of the challenges that we were dealing with expectations and then maybe reality?
I mean, that is always a challenge, the expectation versus the reality in the state, and not understanding and then having to catch up and being timely about that catching up.
Very good, thank you.
Okay, any other questions? Okay, seeing none, thank you so much for the presentation. Appreciate your time today. Thank you very much.
Thank you very much.
And with that, we move on to our next presentation, which is our health benefit presentation. So over the last few months, Member Zay, Member Salman, myself, Nick, Margaret, Jeff, we've been working with Marsh McLennan and on our health benefits. And I'm very excited for Chris to present today. He'll be presenting on Zoom, and he'll give you the presentation of what we plan to bring forward in the next few months. So Chris is available, so we'll wait to get him on here. Oh, hi.
Good morning. Yeah, well, thank you, Ms. Chaplin, and good morning to the members of the county board. Again, my name is Chris Boucher. I'm with Marsh McLennan, and since April of this year, our firm has served as the employee benefits advisor to the county of DuPage. This is our second stint with the county, and on behalf of our entire team, I'll share that we're proud to once again serve as your benefits partner. I certainly would have preferred to have joined you today in person, but unfortunately, I too am contending with a family emergency. Still, I appreciate the latitude and the virtual accommodation, but all the same, since April, we've held a number of meetings with the county's internal healthcare work group, and I'd be remiss if I didn't begin this morning by recognizing and thanking those members of that work group for their time and for their commitment to what is a perennial benefits renewal process. So the work group consists of Ms. Chaplin, Ms. Selman, Mr. Zay, Jeff Martinovich, Nick Kottmeyer, and last but certainly not least, Margaret Ewing and the team within her Human Resources Department. Again, thank you all for your continued support. But now to the matter at hand, the county's 2022 employee benefits renewal So it's at this point that I'm going to go ahead and share my screen. So while the internal healthcare work group has been talking benefits for nearly 6 months now, it's not lost on us that most of you haven't been part of those conversations. And so we wanted to start today by taking a walk down memory lane and reminding this committee of the benefit decisions that the county board resolved in advance of the 2021 plan year. And here it is encapsulated on one slide. So in aggregate, across all of the county's benefit programs for 2021, budget costs were projected to increase by $77,000 if no changes were implemented. So $77,000, certainly a lot of money, every dollar counts, but against an annual benefit spend of roughly $32.5 million, $77,000 equates to about a 0.2% increase. So a very favorable renewal projection for 2021. But all the same, as we look at each of these programs individually, again, heading into 2021 for the medical and the prescription drug plan administered by the Blues of Illinois, we were looking at a decrease of $39,000, a reduction of 0.1%. And based on that projection, no changes were implemented for 2021 to the plan designs nor to the employee contributions. And employee contributions, this is what the employees pay through payroll to participate in the health plan. The dental program administered by Delta was looking at an increase of 7%, $116,000. No plan changes were installed, but employee contributions were increased by 7% for the dental. That was a pickup of about $90,000 to the county. So it didn't offset the dental projection entirely, but it was an offset nonetheless. And then as it relates to the vision and life insurance programs administered by Superior and the Hartford, respectively, these are both fully insured programs. Both were under rate guarantee as we transitioned from 2020 to 2021. So no increase. And as a result, no changes were implemented for those programs. This slide here, 3, is a depiction of the county's medical plan offerings today. I'm sharing you this slide because 93% of the county's employee benefit spend is attributable to the medical and prescription drug plan. And so you can see we have 4 plan options, an HMO, and then 3 PPO plan options. And you'll take note at the very first row that we have roughly 87% of our enrollment enrolled in the HMO offering. The other, call it 12.5%, are distributed between the 3 PPO plan options. And again, this plan did not change in design any of the plans from 2020 to 2021. So how has the county health plan performed? Well, we're going to isolate the medical. And it's very difficult to measure year-over-year performance in the aggregate because your headcounts fluctuate from year to year. So for comparative purposes, what we do is we take your aggregate performance and we distill it into a per capita format, per employee per year. And so this is the HMO and the PPO plans combined per employee per year. And the way that this exhibit sets up, we've got 2016 on the far left-hand side, trending out to 2020 on the far right. At the top of each bar is the gross cost per employee per year, so $12,481 in 2016. In green is the employee share of the cost. This is what they pay through payroll to participate. 2016, $2,322. And then at the bottom in blue is the county's employer net share of the cost, $10,158 in 2016. At the top of each bar, we have a pie chart. And what this illustrates is the distribution of the cost, employee at 19% versus the county at 81%. And you can see how that has ferreted out over each of the last 5 years. Now, this is a very unusual story, one that we don't often get to tell to our clients, and that is the trajectory of your health plan spend. We know the cost of healthcare increases each and every year. We call that inflationary trend, and you have to make changes just to get back to neutral. And so based on the resolutions that the county board has made, you're looking at an average increase per year on a gross cost basis per employee. We call that CAGR, or compound annual growth rate. It's the text box in the bottom left corner. So on average, from 2016 to 2020, health plan costs went up 1.2%. The county spend, however, decreased on average 0.3% over this 5-year review period. You'll also notice how the share of the cost has moved slightly. When we were in the saddle several years ago, we had put in place a 5-year strategy to get the distribution of the cost to an 80-20 format. And we were planning on landing in that result in 2017, and we did. And you'll notice that the numbers have continued to trend in a favorable direction each of the last 3 years. Currently, the split between the county and the county employees, 77% versus 23%. And so you look at these numbers on screen, these gross costs, and we see the performance is good, but are the numbers themselves good? Are the costs high or are the costs low? And so in order to measure that and to illustrate those results, what we've done is put together this exhibit on slide 6, which recaptures the county gross costs in blue and plots them against large employers. Those are large in this regard is those employers with over 500 employees. That's in green. And then we have large county governments in red. So I don't need to tell you that if you compare your results in blue versus either of the two metrics for comparative purposes, the county health plan is performing very, very well. Back in 2016, we were sort of at parity with the market, but over the last 4 years, we have certainly separated ourselves in a good way from other employers in the way that their plans are performing. So how is the plan performing this year? Well, these are the year-to-date results through July, and the plan is performing well. Across the self-funded programs, that includes the medical and prescription drug HMO and the medical and prescription drug PPO and the dental programs, all self-funded. We are looking at a favorable variance again through July of 2.1%, about $408,000 to the good. But we still have 5 months to go, and we'll continue to manage and monitor these results. So what are we projecting for 2022? Well, across all the lines of coverage, so this is the medical, this is the dental, this is the vision, the life insurance, all programs combined, we are looking at an employer net cost increase to the county, 1.6%, about $382,000. This is if we do nothing. This assumes that we maintain the current employee contributions. This assumes that we maintain the current plan designs, and this assumes that we do not change our in-force vendor relationships. When you look at the distribution of that $382,000, you can see that it's all coming from the medical program. The HMO plan is projecting a decrease. Again, that is around 87% of our enrollment, a decrease of nearly 2%, $350,000. The PPO plan, which carries about 280 participants, is projecting an increase of 20%, about $882,000. Earlier this year, we had some dialogue with the Blues of Illinois with regard to the stop loss renewal that I'll show you in a couple of slides. And we were able to negotiate a $150,000 one-time customer retention credit offset from the Blues. That number, that $150,000 has already been integrated into the $382,000 projection. The dental, the vision, the life insurance, no change projection in the projection for 2022. So how do we develop these numbers? Where do we get these, the medical projection? Well, we look at 24 months of claims and we weight the most recent 12 months at 70%. We weight the more historical 12 months at 30%. This is the two 12-month periods that are included in the underwriting for 2022. Just a lot of numbers on this page. I'm going to hit the highlights for you. We have the HMO plan at the top, the PPO plan in the middle. Down at the bottom, we're blending both of the plans. And what you'll notice is that for the HMO plan, monthly claims are increasing between the two 12-month experience periods by 2.4%. But our enrollment is down 1.3%. So our per capita costs are up roughly 4% for the HMO. A bit of a different story for the PPO plan. We're looking at a 6.7% increase on the paid claims per capita for the PPO. So the risk and the volatility within the PPO segment is greater than that of the HMO. What I'll also draw your attention to is the stop loss reimbursements. for the PPO plan. We're going to get into this in a couple of slides, but the stop loss reimbursements for a party of about 280 participants was north of $900,000 for the 12-month experience period, July 2019 through June of 2020. And over the most recent 12 months, July 2020 through June of 2021, we have received reimbursements from Blue Cross Blue Shield of Illinois on our stop loss program exclusively for the PPO population of about $1.42 million. The other component that's factored into our underwriting beyond just the claims, excuse me, is the fixed costs. We have the HMO fixed costs at the top, the PPO fixed costs in the middle, and then again, we're blending the two at the bottom. Fixed costs for the HMO, inclusive of the capitated fees, your stop loss fees, and your Blue Cross Blue Shield admin fee, the fee that we pay them to process the claims, increasing less than 1% for the HMO. Again, I'll say it one more time, 87% of our population is enrolled in this offering. For the PPO plan, fixed costs are increasing nearly 32%. Why? Well, the big factor is the stop loss. We received a 39, nearly a 40% increase for the PPO stop loss pricing. That does not include the customer retention credit that we did negotiate. And we negotiated that specifically because we did feel that the stop loss fee for the PPO, the proposed increase was a bit significant, probably inappropriately significant. So the Blues gave us this one-time offset of $150,000. In total, when you roll the two programs together, fixed costs going up 4.9%. So just to speak to the stop loss increase, why would the PPO plan be getting an increase of nearly 40%? Here's the stop loss plan performance over the last year and a half, so 2020, and then year to date 2021, the HMO at the top of the screen and the PPO towards the bottom. You can see that for 2020 on the HMO, the Blues lost $114,000 on your plan. So what that means is you paid $901,000 in stop loss premium in 2020 for the HMO plan, and the Blues gave you back over $1 million in stop loss reimbursements. Year to date, 2021 for the HMO, the plan's performing pretty well. Again, we saw the year-to-date plan performance on the HMO, but also we don't have a lot of large claimant activity. So therefore, thus far through July, only 10% of the premium that we have paid in stop loss for the HMO has been returned in reimbursements. A different story though for the PPO. You can see that we, in 2020, we're looking at a $106,000 deficit, the Blues were. You paid them $106,000 less than they paid you back in stop loss reimbursements. And year to date 2021, and this is the big difference, 70% of the funds that you have paid them in stop loss premium has already been returned in stop loss reimbursement. And again, that's only through July. So that number is going to continue to climb. And it's based on that factor that the Blues felt the 39% increase was appropriate. So you roll it all together, again, all lines of coverage. We have the 2021 budget that we are tracking against today versus the 2022 budget projection if we do nothing, increasing $382,000 employer net, 1.6%. And if you were looking for an accounting ledger of the distribution of the costs, it would reside on slide 14. We isolate each line of coverage. Each line of coverage is broken out by the total or the gross cost, the county's employer net cost, and then the employee's share of the cost. So HMO, PPO, here's that one-time installation credit for the Blues. That's how they've categorized it, the dental, and so on and so forth. 2021 budget down the middle of the page, 2022 budget, do nothing to its right. So we're looking at an increase of $382,000. What should we do to defray that projection? We considered a number of plan options, cost avoidance options over the last 6 months with the county's internal healthcare work group. And there are two options that we've landed on and are submitting for your approval today. The first one concerns employee contributions. So dating back to 2017, the county has not changed the employee contribution structure for the medical plan but once, and that one time was in 2021. No change, or excuse me, 2020, no change in 2021. So we looked at a number of options, and the option that we are putting on the table for your consideration is to increase employee contributions, all plans, all coverage tiers by 3%. What is 3%? So we have the current contributions for 2021 in yellow on the left-hand side by plan option, by coverage tier. And then we have what those contributions would look like in 2022 with the 3% adjustment. And then we've done the math for you on the right-hand side of the page, showing you what the monthly contribution difference would be for the participants on a pre-tax basis. If this change were to be implemented, it would generate $197,000 of payroll contribution revenue for the county. The other option that we're putting on the table for your consideration is specific to the county's medical opt-out bonus. So an opt-out bonus is an incentive that employers offer to benefit eligible employees who decline the available medical and prescription drug coverage. And the concept is of a medical opt-out bonus is if we can incentivize participants to leave our plan or to enroll in maybe perhaps their spouse's plan or perhaps even in an individual plan, then we will save money. It's simple math. The fewer participants that we have on the plan, the lower our cost would be. And boy, if we could give them some money to incentivize their departure, then we could potentially win. When we look across the country, we see about 12% of employers leverage an opt-out bonus today. It's a bit of an antiquated practice. But when employers do have an opt-out bonus, that 12%, the median incentive amount is $100 per month or $1,200 annually. The county currently does have an opt-out bonus. It's $50 per month, and we have 361 folks that are waiving coverage today and collecting that $50 per month bonus. Now, for our clients that have opt-out bonuses, what we have detected as we either eliminate the opt-out bonuses or draw the amounts down is that when we take that action, the number of opt-outs doesn't change. So whether we eliminate the opt-out bonus altogether or we take the amount down from, say, $100 to $50, when we look at our future year's enrollment, we still have the same number of opt-outs. Why would that be? The reason that is because the employees are not opting out because you're paying them to do so. They're opting out in all likelihood because they have a better option available to them. And so what we are proposing is to test that theory and to change the county's opt-out bonus from $50 per month to $25 per month. And if that modification is instituted, the county will realize savings of about $108,000. So when you marry those two options together, the increase to the employee contributions of 3%, the reduction of the opt-out bonus, it would generate cost avoidance of roughly $306,000. That $306,000 against the do-nothing projection of $382,000 provides a result of an adjusted result of $76,000 or 0.3%. So said differently, if these changes are instituted, the county's revised projection for 2022 will be an increase of 0.3% or plus $76,000. And those are the options submitted for your review and consideration. Questions?
Do you have any questions? Member Krajewski and then Member Renahan.
You know, years ago, we employees were paying very little and the county wanted to go on to an 80-20 plan where the employees paid 20% and we paid 80. But I think I heard you mention we're at 77-23.
Correct.
So we're having the employees pay a little more than what we had anticipated. So I'm not in favor actually of adding another 3%. on there if unless we're gonna have a debate on whether that 80-20 is appropriate, but we decided years ago, clearly it was a different board, that we wanted to get to 80-20. Now, not only we got there, we're on the other side of that, where the employees are paying more. So I guess I'm not in favor of this 3% increase. I think we need to get back to 80-20, what we said we were gonna do, and take a look at that, unless we're gonna have a discussion on that, but I'm not in favor of that 3%.
Thank you, Member Krajewski. Member Ryan, and then Member Desart.
I have the same concern. We keep talking about what we're paying our employees, and yet we're putting more on their backs. I mean, 3%. I'm also trying to reconcile. At the beginning of your presentation, you had said $408,050 under budget. So I'm wondering, if we are under budget, if we're looking at, pretty exponential increase. You talked about what, 39-40% for PPO. So I'm just wondering, how do we reconcile those numbers?
So the budget projection that we had showcased, the $382,000, that is budget to budget. She asked a very fair question. It's a very fair point. That is not against year-to-date actual performance. Because the year is incomplete and it would be artificial for us to draw that comparison at this point in time.
Okay, Member Desart, then Member DeCiani.
Thank you. Yeah, I have the same concerns as members Krajewski and Renahan. We are at a point where we're trying to attract the best people and then retain the best people. And I think that should be our priority. It's easier to keep people than to hire new people and retrain them.
Thank you, Member Desart. Member DeCiani, go ahead.
Thank you, Chairwoman Chaplin. I think it's important to realize for many of us, many of the people that are here, they're new. We've always seen a little higher cost in our PPO. Typically, people who have challenges with health typically go on the PPO because they have more choices on doctors, et cetera. So we've always kind of seen that situation. So and we see a lot of more of the younger, healthier people on the HMO. And we've seen more movement from the PPO to the HMO for those people who are more healthier because the premium's a lot less. So it's not uncommon for the PPOs to cost us more money. I think it's important that we have a PPO, and having the HSA PPO, I think, is very important as well, because people can self-insure their premium and actually control their own destiny with their healthcare. So I think we've got a good plan. I agree on the 80-20. I think if we push our employees at a higher level than that, I think we end up competing with the outside, which has been a lot more aggressive and paying more in compensation and benefits. So I think it's important for us to stick to that 80-20, but not lose sight on how important that PPO is for a lot of families who have medical issues. Thank you.
Absolutely. And that was something we discussed, that we wanted to keep all those plans available. I believe Member Pachowski and then Member Selman.
Thank you, Madam Chairman. Yeah, I'm echoing what's been said, but those of us who are on collective bargaining, we see that retention's an issue. And if retention's an issue, I don't want to put the burden on the employee for this increase. So yes, the 80-20, and I'd like to do better than that, because we always say what great staff we have at the care center and what great staff we have here. And I'm not going to put the employee increase on the back of the employee. So we have to find some other way to manage this. Thank you.
Thank you, Member Pachowski. Member Selman, go ahead, please.
Thank you. I definitely agree that we are trying to manage costs for our staff. Unfortunately, if we continue pushing the increase down the road, it means we will have a larger increase later. We can either have about $400,000 shortage this year and kick the can down the road, or we can give our employees a little bit of predictability, which is what this 3% change is. It shows that we're going to start, meeting the market. If you go back in those charts where our costs are much lower than either large employers or county governments, but we can't continue kicking the can down the line. I hear the frustration about the 80-20, and I unfortunately think it's a frustration with healthcare in our nation and the extraordinary costs. And I wish we had solutions that didn't either go to our budget or staff or to employees' budget, but those aren't options to us, unfortunately. And then just lastly, I wanted to make a special note to thank Member Zay. Usually it's the finance chair and the vice chair who are on this committee, and I really appreciate Member Zay staying on and bringing that institutional knowledge to just bolster Member Chaplin and I. It made the process much easier. So thank you.
Thank you, Member Selman. Member Zay, did you have some questions or comments? Thank you.
Just a couple of comments. We haven't had an increase since 2016 to our employees. I understand, and that 80-20 number, I think, is kind of skewed because we have less employees than we did. So I think that's why that 80-20 number is off. If you looked at the costs on that chart, you're actually seeing our health costs are going up at this point. They're not going down, they're going up. So you have less employees paying for those programs that we have, plus the increases. So I think if we really looked at, took a good look at those numbers, you would still see we're within that 80-20. And again, we haven't had an increase since 2016, and obviously nobody wants to do increases. But again, that's the question. I mean, I'll go whatever the board says, and we've done a great job with our insurance over the years. But again, do we just kick this down the road, and then next year or the year after, you have to institute a 5 or 6 or 7% increase on health insurance? I mean, everybody knows health insurance. Anybody who owns a business knows health insurance is a major concern out there. And the county has really weathered the storm really well over the years. And so a 3% increase since 2016 isn't a lot at this point. And I understand we were doing it, but again, at the same time, we are looking at, you know, equity and doing other things to increase that. And if you look at that chart, those numbers are not, I mean, every amount more is more to people, but it's not huge numbers. But if we kick it down the road, they will become huge numbers at some point.
Thank you, Member Zay. Do we have any other questions? Member, could you go ahead, please?
Yeah, I still 80-20, whatever the cost is, it's 80-20. So if costs go up and we're keeping a 80-20, then employees 20% is gonna go up. And if costs, you know, it's 80-20, it's whatever. I mean, it doesn't matter how many employees we have. If we have 500 less, our costs aren't gonna be, we're not paying for 500 additional people. So it's 80-20, if that's what we decide. And then in the future, we're not kicking a can down the road. In the future, the costs go up, whatever 20% is divided by the employees, that's what they're paying. It's an 80-20 split. And I think, did you mention 2016 or 2020? Because you started, when he was mentioned, he said 16, but then he said 20, there was an increase.
Well, if I can respond, in 2020, we had that opt-out was $100. We changed that to $50. So that was the plan change made. There was no increase. It was just the change out from 100 to 50. Now we're doing 50 to 25.
Because I think we just come out, I mean, if we want to change a policy, make it 75-25, that's fine. Then whatever 25% of the cost is spread among the employees. But if we're saying it's 80-20, it doesn't matter. Costs go up, you know, the 80-20 is going to be the 80-20.
Okay, any other questions or comments? Excuse me, when we were discussing this in our meetings, we did talk about retention. That was something that was brought up with this increase. And excuse me, staff did feel that the 3% was reasonable and that it wouldn't really cause a huge exodus. So that is something, because that was something that I had mentioned too, and I know others in the meetings that we had were concerned about retention with those increases. So just something to keep in mind. We're not voting on anything today. This was a presentation. We'll, be bringing more information before you. Chris, did you have any other closing comments or anything that you'd like to add?
No, I certainly appreciate the time and again, the latitude for this virtual session.
Great. And thank you so much. It's been a pleasure working with you and your team as well. And we'll probably be getting back together to discuss, what took place today.
Sounds good. Thanks, everyone. Have a good morning.
Thank you so much. Thank you very much. Okay. And with that, we go to item 6, approval of the minutes. I'll entertain a motion to approve the minutes of the Finance Committee meeting from Tuesday, September 14th. We have a motion by Member Desart, a second by Member Garcia. Any discussion? Okay, all in favor? Aye. Opposed? Okay, that motion carries. With that, we move on to item 7, and we have a consent item. Per our state's attorney, we're going to be pulling this item. Since no RFP was issued, I'm told that we do not have to have this item on the agenda, correct?
No, right now, we're still working on it.
Right. So just to address some questions and comments, we are pulling this, but I want to assure everyone that staff is meeting today with members from the election division, and they are finalizing up the RFP. We hope to have an RFP sent out by the end of this week. And I know I am committed to making sure that we purchase election equipment, that we get this done. It's imperative that we do it. And I have been on phone calls with Nick this week, with the Election Commission this week, keeping in touch, making sure what is, that we're following through on this. So I'm definitely committed to making sure that this process gets moving and that we bring an RFP back to the board as soon as possible. Member Eckhoff and then Member Zay.
Well, I just have a question as to the procedure. If the state's attorney thinks this has to be pulled, it has to be pulled, but I'm trying to figure out why we can't vote on the remaining bidders, ESS, which came in number one when the full point system was considered. And if we are going to go out for another RFP, how is this going to be any different? How are we going to get any different results? Are we just giving somebody a chance to underbid what the other four bids already were, or what?
Nick will come up to address that.
Good morning. First of all, we're pulling this because since we did not award the RFP, there's not the necessity to officially revoke the RFP on the street. This was put on out of abundance of caution on Friday in case we had to. I know it's the clerk's intention to go out for a new RFP. They're working closely, procedure-wise, process-wise, with the state's attorney, procurement, myself, to have the new RFP. And the thought process would be, at a minimum, the process will be very clear, very straightforward with the RFP. They've dialed in with what their wants for the system are. They've learned a lot during the last process, and it's a more refined process. And they're very much comfortable, along with State's Attorney and myself, that a refined process will protect the county in the long run.
Well, okay, but how is it going to be different? I mean, a refined process, I'm not sure what that means. It seems like all these vendors have gone through bidding before, so it just seems like we've opened up the process to disclose to everybody what their original bids were, and now we're going to have another bidding war or something like that? Or are we going to ask for additional items or that they're going to bid on? I just don't understand why you can't go from, if the one doesn't get the proper votes, why can't you go to the next one? What's the point of having another RFP?
There were a lot of questions on process on the last RFP. That process was in question, whether you awarded to the first bidder, the second bidder, the third bidder. There were process questions, and all of those process questions are being fixed in the new RFP.
So when is this going to come back to us so that we can vote again? And pick somebody so that we get this thing
I can
moving?
tell you the timeline, and the clerk is the one kind of setting the timeline. It would be back before this county board at the second meeting in October is the plan, to have it awarded by the end of October. And with that timeline, the clerk is comfortable that the process wise and timeline, they'll meet the requirements for the election.
Well, I just hope that this time we get all the information in advance so that we can look at it, read it, think about it, and ask questions, as opposed to what we got the final day of the last vote, which was new information on our table that we hadn't seen before. That was where I had a big problem.
Member Zay and then Member Krajewski.
Thank you, Madam Chair. I've also been on the phone with staff and Scott McKay at the Election Commission and the State's Attorney's Office. And my question was, any way we could still use those RFPs, ask for addendums, do anything else. It was their feeling that this was the best and safest way to do it. And so make sure we weren't going to get sued or anything else. We had a lot of discussion where one vendor didn't do, printing ballots, on demand at polling places. Let's make sure it's done the right way. I know my colleagues, we all want new election equipment. There's no doubt about that. No one has a horse in this race on anything. Whatever equipment we get is what we get. I think the price differential was the biggest question that we had at that point. So I thank staff and the clerk and all them for expediting this process. Let's get this done. Let's get this back to us, and so we can get new equipment and get it up and set ready for the elections next year.
Member Zay, Member Krajewski.
Yeah, thank you. I mean, I think there was a very big problem with the RFP process, and hence that's why we need to do this. I mean, I got a call from the state attorney 30 minutes before the meeting, and he said they were gonna pull it because they had concerns about it. And so, you know, I'm glad we're gonna send out a new RFP, because I think that last one, the whole process, everything had problems. I would just ask, I assume that, you know, you said a lot of conversation, but can the election commission make sure things that they want to put in this RFP, because it was very expansive, but they said requirements, these are requirements, but they really weren't requirements because a number of the firms didn't meet several. Even ES&S didn't meet a couple of the requirements, and they said, these are the requirements in Appendix A. So if they don't want them and they don't need them, don't put them in the RFP. Just say whatever they want. If they don't want it certified federally, then just don't put that in there. It makes it a lot easier. And I assume that's what they're doing. I assume that's why the state's attorney's there, that they're going to put in only if they want paper ballots on demand, and that's what they want. But don't put a bunch of stuff in there that you say you want or required, but then it doesn't matter if you don't have it. And so I think this RFP is going to be much better. I assume now that the state's attorney's involved in there. But just tell Lexington whatever they want. If they want it, put it in there. If they don't care, then don't put it in there. But I hope this RFP is much better, but I'm looking forward to whatever comes back. But I think this is the right route, is to get a new RFP out there and then let everybody respond, and then they can go through and pick what they want.
Thank you, Member Krajewski. Member DeCiani.
Thank you. I just hope that, you know, it's very rare to go out with a second RFP, because it gives all of the other vendors that bidded on this project a look at their numbers, in fairness. So I hope that one, the RFP is not stacked to one vendor or another. I hope it's fair and equitable. And again, very, very seldom do you go out for a second RFP. It's very difficult because of the fact that people show their numbers, they go in with their lowest and best offer on a contract. And now we're giving other companies the ability to lower their price, you know, and come back for another bite at the apple. So those are my concerns, you know, in fairness to everybody that's out there. And again, I hope that the RFP is written so it's fair and equitable so everybody can compete. Thank you.
Thank you. Thank you. And I would just like to remind everyone, Member Ozak, go ahead, please. Well, I'm just going to remind everybody that during the first RFP process, the clerk did work with procurement. The clerk is not the procurement expert. We have a procurement department that is supposed to be assisting. And from what I understand, with the original RFP, our clerk worked very closely with procurement and the state's attorney and others to put that RFP out. And we do know that we had some issues in our procurement department right in the middle of the process. So, you know, it wasn't an ideal situation. It was really unfortunate that had happened during what I would consider the most important purchase that we are going to make over the next few years. So I just did want to make that clear. Member Ozak, go ahead, please.
Yeah. Okay. Thank you, Chairman Chaplin. When a new RFP comes forward, I just want to set the record straight about the fact or the discussion that was held that the Hart machine did not have the lowest price. Several times during our last finance and board meetings, I brought up the Tyler Technologies contract, which we approved in May of 2019. And I want to discuss very briefly the scoring for that contract. So that contract, there was a price contract, and I want to just explain every vendor can earn 20 points, okay? So in that particular bid of Tyler in 2019, which many of us here voted in favor of, DevNet was the lowest bidder. If you are the lowest bidder, you get the most points. So DevNet received 20 out of 20 points. The next bidder was Avenue, I believe, which was 12.8 out of 20 points. And at the highest price, thus receiving the lowest number of points, was Tyler Technologies at 11.2. If you go to the other element of the contract, which is 80 points, this is where you measure the actual performance element, let's put it that way. So for firm quality, you could earn 10 points. For firm quality, Tyler earned 9 of the 10 points. DevNet earned 7.2, Avenue earned 5.4. For key quality,
you could earn 10 points. Tyler, 8.6, DevNet, 7.0, Avenue, 4.8. For project understanding, Tyler earned 56 out of 60 points. DevNet earned 50 out of 60, and Avenue earned 40.6 out of 60. So out of this element, which is the performance part of the contract, not the price, the final score was Tyler 73.6 out of 80 points, DevNet 64.2 out of 80 points, and Avenue 50.8 out of 80 points. So when the treasurer came forward to us and presented her choice, which was Tyler Technologies, we decided to go with that, even though they did not receive the lowest price score. However, when everything was scored, Tyler had the highest point. I don't have my numbers right here, but Tyler had the highest score because of how well they did in the performance element of this contract. So I want to make that clear that Tyler did not have the lowest price. However, they did have the highest number of performance points. So please take that into consideration when the next RFP for this is brought forward. And many of us were in that vote, May 14th, 2019, and voted in favor of the treasurer's recommendation, which was Tyler Technologies. Thank you.
Thank you, Member Ozak, Member Selman, and then Member Krajewski, and then we're going to wrap this up because we're pulling this item.
So just to clarify, the Tyler example, as we discussed last week, had the highest score on the RFP, so we purchased it. If we followed the same process, we would have bought ES&S 2 weeks ago. That is how RFPs work. So I want to be very clear, it's not just Treasurer Henry's project, it's a project with the clerk, it's a project with our technology department, it's a $40 million project to change our infrastructure. If there are questions on that project, I would very much encourage members to either come talk to me as the chair or to the CTO, but please let's be very clear and not make up confusion to justify what a process that it seems like we have a good plan and we're starting over. And I'm glad the clerk is feeling optimistic that a mid-October appointment is not a problem. Thank you, Chairman.
Member Krajewski.
Yeah, Tyler was number one based on the performance, the pricing and everything, and the clerk went with the most responsive bidder, number one. We were handed that exact thing that Member Ozog just stated right before our meeting, when they actually factored in the 20 points for the pricing. They had all the performances and how people scored. Hart was third. Dominion was second under that same process that the treasurer went through. And ES&S was number one. When they gave us the exact same performance, understanding of the project, I can read the numbers exactly that Member Ozog just read. And Hart was number three when you did that. And then the exact same process. And you have to go with the most responsive bidder as the clerk, as the treasurer did when they put the whole scoring in. That exact same process was used. It was 1, 2, 3. You know, the election commission added other things into the process, completely different than the treasurer. But under that exact same thing the treasurer did, the election commission did the exact same thing. We were handed that scoring 20 minutes before that vote, and it had 1 ES&S, 2 Dominion, and 3 Hart under that same thing.
Thank you, Member Krajewski. Member Ozog, and then we're going to wrap this up.
I'll pass. Thank you.
Okay. I just, I think, excuse me, what was brought up last meeting was that Tyler was the lowest bid, but in fact they weren't. So I think just clarifying that record, for the record is important. So with that, with no objection, we are going to pull this item from today's agenda. Okay.
Second.
From various companies' accounting units. So there was a motion by member Desart, a second by member Garcia. Any discussion? All in favor? Opposed? Okay, the motion carries. We move on to procurement requisitions. We have animal services, member Krajewski.
Thank you. Recommendation for the approval of a change order number 2, amending the purchase order 4992-0001 for a contract issued to Spay, Illinois Pet Wellness Clinics to provide our pet population fund.
We have a motion by member Krajewski, a second by member Desart. Any discussion? All in favor?
Aye.
Opposed? Okay, the motion carries. Thank you, Member Kajewski. We move on to item B, Economic Development, Member Chavez.
Thank you, Madam Chair. I would like to move approval of EDR 043421, a resolution for acceptance and appropriation of the Illinois Department of Commerce and Economic Opportunity Workforce Innovation and Opportunity Grant, PY21 Intergovernmental Agreement 21681-006 in amount $5,636,958.
We have a motion by Member Chavez, a second by Member Desart. Discussion? Okay, seeing none. All those in favor?
Aye.
Opposed? Okay, the motion carries. Member Chavez.
All right, I move approval of EDR 043521, resolution for approval and of issuance of payments by DuPage County to training providers for the youth contracts of the Workforce Innovation and Economic Opportunity Act Grant PY21 Intergovernmental Agreement 21681-006 in the amount of $2,816,229.
Okay, we have a motion by Member Chavez, a second by Member Covert. Any discussion? Okay, all those in favor? Opposed? Okay, the motion carries. Member Chavez.
All right, I move approval of EDCO 050221, amendment to the contract issued to the Parents Alliance Employment Project for Youth Training Services to extend and increase the contract for $91,594.
We have a motion by Member Chavez, a second by Member Covert. Any discussion? Okay, all those in favor?
Aye.
Opposed? Motion carries. Member Chavez.
Okay, I move approval of EDCO 050321, amendment to the contract issued to Parents Alliance Employment Services, extend and increase this contract by $741.
We have a motion by Member Chavez, a second by Member Covert. Any discussion? Okay, seeing none. All those in favor?
Aye.
Opposed? Okay, the motion carries. Thank you, Member Chavez.
Thank you.
Move on to item C, Finance, Member Kajewski. Oh, your microphone, please.
I move on change order elections operating LLC 327 decrease and closeout.
Member Kajewski, a second by Member Garcia. Any discussion? Okay, all those in favor? Opposed? The motion carries. Member Kajewski.
Thanks, Madam Chair. And last, I move on 2021-80 recommendation for the approval of a contract purchase order to Grancus LLC to provide our software platform.
Okay, we have a motion by Member Kajewski, a second by Member Desart. Any discussion? Okay, all those in favor?
Aye.
Opposed? Okay, the motion carries. Thank you, Member Kajewski. We move on to item D, Judicial Public Safety, Member Renahan.
Thank you, Madam Chair. I move approval of JPSP 36121 contract purchase order with Sentinel Offender Services to provide GPS device and electronic monitoring for juveniles and adult offenders and their victims, October 1st, 2021 through September 30th, 2022, not to exceed $103,000. This is for probation and court.
Okay, I have a motion by Member Renahan, a second by Member who second that, Member Desart. Any discussion? All those in favor? Opposed? Okay, the motion carries. Thank you, Member Renahan. We move on to item E, Public Works, Member Ozog.
Thank you, Madam Chairman. I move for approval of FMP 037021, recommendation for the approval of contract purchase order to Nicor Gas for natural gas utility and distribution services for county facilities for facilities management for the 4-year period, October 1st, 2021 through September 30th, 2025, for a total contract amount not to exceed $925,850.70, not suitable for competitive bids, public utility.
Okay, we have a motion by Member Ozog, a second by Member Desart. Any discussion? Okay, seeing none. All those in favor?
Aye.
Opposed? Motion carries. Member Ozog.
Thank you, Madam Chairman. I move for approval of FMP 036821, recommendation for the approval of a contract to Arlington Glass and Mirror for on-call window glazing, repair, replacement, window adjustment, and board-up services as needed for county facilities for facilities management for a 2-year period, October 1st, 2021 through September 30th, 2023, for a contract total amount not to exceed $70,000, renewal option, first and final option to renew.
We have a motion by Member Ozog. Who made that second? Second by Member Desart. Any discussion? All those in favor?
Aye.
Any opposed? Motion carries. Member Ozog.
Thank you. I move for approval of FMP 036721, recommendation for the approval of a contract to Wold Architects and Engineers to provide on-call professional architectural and engineering services as needed for facilities management for the period September 28th, 2021 through November 30th, 2024, for a total contract amount not to exceed $250,000. Professional services vetted through a qualification-based selection process in compliance with Illinois Local Government Professional Services Selection Act.
We have a motion by member Ozog, a second by member Garcia. Discussion? Okay, all those in favor?
Aye.
Opposed? Okay, the motion carries. Member Ozog.
Thank you. I move for approval of PWP 037121. Recommendation for the approval of a contract purchase order to Nicor Gas for natural gas services for Public Works for the period October 1st, 2021 through September 30th, 2025, for a total contract amount not to exceed $515,000 per Illinois competitive bids not suitable for competitive bidding public utility.
We have a motion by member Ozog, a second by member Garcia. Any discussion? Okay, all those in favor?
Aye.
Opposed? Okay, the motion carries. Member Ozog.
I move for approval of PWP 036921. Recommendation for the approval of a contract for Polydyne Incorporated to supply polymer for the Woodridge and Knollwood wastewater treatment facilities for Public Works for the period November 1st, 2021 through October 31st, 2022 for a contract total amount not to exceed $270,000 per renewal option under bid award, second of three possible bid.
We have a motion by member
possible
Ozog,
readings.
a second by member Desart. Discussion? Okay, all those in favor?
Aye.
Opposed? Motion carries. Member Ozog.
I move for approval of PWCO 050621 and PWCO 0031A20. Recommendation for the approval of amendment to resolution PWCO 003120 and PWP 025919 issued to Polydyne Incorporated due to changing biological phosphorus removal, which increases sludge production for Public Works, to increase the contract in the amount of $70,000, taking the original contract amount of $174,452.85 and resulting in an amendment contract total amount not to exceed $244,452.85, an increase of 40.3%, 40.13%.
Okay, we have a motion by member Ozog, a second by member Garcia. Discussion? Okay, seeing none. All those in favor?
Aye.
Opposed? Okay, the motion carries. Thank you so much, member Ozog. We move on to item E or F, transportation, member Potowski.
And I will be, as vice chair,
Oh, okay.
standing in for Mr.
Thank
for
you.
member
Thank you, member
Polcharski.
Ozog.
Okay, I move for approval of DTP 037421, recommendation for the approval of a contract purchase order to K-Tech Specialty Coatings Incorporated to furnish and deliver de-icing liquids as needed for the Division of Transportation for the period December 1st, 2021 through November 30th, 2023 for a contract total amount not to exceed $170,000, exempt from bidding competitive bids not suitable for competitive bids, sole source.
We have a motion by member Ozog, a second by member Garcia. Discussion? Okay, all those in favor?
Aye.
Opposed? Motion carries. Thank you. Member Ozog.
I move for approval of DTP 037321, recommendation for the approval of a contract purchase order to ComEd to provide electric services as needed for the Division of Transportation for the 4-year period, October 1st, 2021 through September 30th, 2025 for a contract total not to exceed $575,000 public utility.
We have a motion by member Ozog, a second by member Garcia. Any discussion? Okay, all those in favor?
Aye.
Opposed? Okay, the motion carries. Thank you, member Ozog.
Okay, I move for approval of DTP 037221, recommendation for the approval of a contract purchase order to Nicor Gas to provide natural gas distribution services as needed for the Division of Transportation for the 4-year period of October 1st, 2021 through September 30th, 2025 for a contract total not to exceed $60,000 public utility.
Okay, we have a motion by member Ozog, a second by member Garcia. Discussion? All those in favor? Opposed? Motion carries. Member Ozog.
Okay, for the item number 4, I would like to make a motion to waive the first reading of DTO 008821, an amendment to the DuPage County Fair Share Road Improvement Impact Fee Ordinance ODT 021R89.
Can I have a second on that motion? Motion to waive? We have a motion by member Ozog, a second by member Zay. Any discussion? All those in favor? Opposed? Okay, motion carries. Member Ozog.
Okay, let me get this straight here. Okay, we've waived the first reading. Okay, then I would like to make a motion to approve DTO 008821, an amendment to the DuPage County Fair Share Road Improvement Impact Fee Ordinance ODT 021R89, which will include new expenditure and fee mitigation policies and updates to impact fee rate schedule.
We have a motion by member Ozog, a second by member Garcia. Discussion? Okay, all those in favor?
Aye.
Opposed? The motion carries. Thank you, member Ozog. We move on to
Thank you,
item
Madam Chairman.
10, finance resolutions. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0436-21. It's a resolution acceptance and appropriation of the state court improvement program.
We have a motion by member Krajewski, a second by member Renahan. Any discussion? All in favor?
Aye.
Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0438-21, resolution placing names on payroll.
We have a motion by member Krajewski, a second by member Zay. Discussion? All those in favor?
Aye.
Opposed? Motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0444-21, resolution additional appropriation for the Arpa Fund Housing Support Program for Community Services.
We have a motion by member Krajewski, a second by member Desart. Discussion? Okay, seeing none. All those in favor? Any opposed? Okay, the motion carries. Member Krajewski.
Thank you, Madam Chair. I move on FIR 0445-21. It's a resolution for additional appropriation for the ARPA Fund Eviction Mediation Program.
Okay, we have a motion by member Krajewski, a second by member Colbert. Discussion? Okay, all those in favor?
Aye.
Opposed? The motion carries. Member Krajewski.
Thank you, Madam Chair. And last, I move on FIP 0375-21, a recommendation for approval of the contract purchase order between the County of DuPage and Rockview Still and Connolly LLC to provide our consulting services for collective bargaining matters.
Okay, we have a motion by member Krajewski. Do we have a second? Second by member Chavez. Discussion? Okay, all those in favor? Opposed? The motion carries. Thank you. We move on to item 11. Informational, member Krajewski.
Thank you, Madam Chair. I move to receive and place on file informational items, the A, payment of claims, B, the appointments, C, the grant proposal notifications.
We have a motion by member Krajewski, a second by member DeCiani. Any discussion? All in favor? Opposed? Okay, the motion carries. Thank you so much, member Krajewski.
Thank
With
you.
that, we move on to old business, our cannabis update. So I'm going to call Paul Haas up here, and while he's coming up, I just wanted to mention that just about 2 years ago, the county board voted to opt out of the retail marijuana sales in an unincorporated area. So over the past 2 years, there's been a lot of changes with regards to adult use cannabis. So I've asked for a review and update on the status of cannabis in the area, and to get a feel from the members after today's presentation, if this is something the board would like to move forward with, to send back to development committee to work on an ordinance allowing the adult use of cannabis in the unincorporated areas. But I do want to make it clear that if this does go back to development, that if that's the direction that the board takes, that we will definitely include the sheriff, the state's attorney, and the health department in those discussions. I think it's important, and I think we have to. So with that, I will turn it over to Paul Haas.
Good.
Thank you,
Good.
Paul.
Thank you, Madam Chair. Good morning. To inform this conversation, I've been asked to provide some information about the current status of the county regulations on adult cannabis use, also the state statutes and some of the changes that have been made in the interim, as the chairman said, between 2019 and now. Also to give you an idea, an update as to where other collar counties are and where municipalities in DuPage County are on adult use cannabis. Some of the expected revenues and tax on that revenue might be based on projections, and also next steps moving forward. Having said that, as the chairman said, in October of 2019, the county opted out, passed an ordinance opting out. That ordinance and that language is embodied in Chapter 38 of the county code. One of the important things to note, however, is that at that same time, the county board did approve and adopt the ability to tax cannabis occupation and sales. So that provision is in the county code. It's just that the county did opt out. And that, once again, that can be found in Chapter 38. One of the things that informed the county board's decision, one of the things that informed of the many issues that were before the county board at the time, was at the time the state statute had a distance requirement that adult cannabis uses had to be from protected uses being schools and daycare facilities. That provision at the time was 1,000 feet from those protected uses. When the county superimposed that 1,000-foot distance requirements on all of our possible locations, we found that we had a very, very limited number of locations, and some of those locations were properties that were floodplain, wetland, very undesirable pieces of property. So at the point, that was one of the things that informed their decision, really not a lot of locations. In the interim, the state statute has changed, and there is no longer that distance requirement from protected uses. That 1,000-foot distance is no longer in the state code. One of the things to be clear about, however, is that if you read or hear anything about the state statute, there is still a provision in there that requires that there be a 1,000-foot distance requirement from advertising any adult cannabis or cannabis infused products. So while there is no distance requirement from citing a location, you can't advertise within 1,000 feet of a protected use, a school or daycare facility. As it relates to where the collar counties are at, and some of the municipalities in DuPage County are at, after about a year moratorium, some of the counties have our collar counties had on adult cannabis dispensaries. Every collar county is now opted in. Cook, Lake, McHenry, Kane, Kendall, and Will are now all opted in. They have several different types of regulations, but they have all opted in. In the municipalities in DuPage County, we have 16 municipalities that have opted in. We have 17 municipalities that have opted out. I know we have more municipalities that are on the periphery of the county, but all of the counties that are clearly inside DuPage County, 16 have opted in, 17 have opted out. Of those 16, 7 municipalities actually have dispensing locations. If we have the map up, do we happen to have the map for location? No, okay. So we have 7 municipalities. Of the 7, we have 10 dispensaries in DuPage County. On the southeastern side of the county, we have Aurora that has 1 in the DuPage County area of their jurisdiction. We have Naperville that has 3. We have, going to the east, we have Westmont that has 1. And in the center part of the county, we have Lombard, Oakbrook Terrace, and Villa Park that each have 1 dispensary. And then in the northeastern part of the county, we have Addison that has 2 dispensaries, for a total of 10 dispensaries in DuPage County and the municipalities. In terms of revenue, we spoke with several of the collar counties, municipalities outside and inside DuPage County. We weren't able to get actual numbers because of confidentiality regulations. They all appointed us to the Illinois Economic Policy Institute, which had some projections that they provided back in 2018. Each municipality that has a dispensing organization told us that, or dispensing location, told us that those projections by the Illinois Economic Policy Institute were pretty much online and consistent with their actuals, even though they couldn't give us the numbers. And so generally what we found is that a dispensary can expect to have revenue in the amount of $7 to $9 million per year, with an expected tax revenue on that of about $235,000 per year. Now that projection is based on the municipality tax rate, which is 3%. If you were to put the county tax rate on that of 3.75%, that would generate a $7 to $9 million revenue per year, would generate around $275,000 to $350,000 in taxes per year. Now, those aren't actual numbers, but some of the communities that we talked to said that those projections are consistent with what they have and what they're seeing right now. Those projections are consistent with what they would probably anticipate at the end of the year. One of the things that we were able to find statewide in Illinois is that in 2020, there was approximately $670 million in revenue for on cannabis sales. In 2021, from January until until August of this year, those revenues are about $870 million. In 2020, the tax revenue on the $670 million was about $125 million. There are approximately 110 licenses that have been issued statewide. Those licenses have been allowed to increase to approximately 295 available licenses throughout the state. Not all those licenses have been issued. The way that the licenses are distributed throughout the state is that they're based on the Bureau of Labor Statistics areas. The county is in the Chicago, Elgin, and Naperville region. So the county, that region could be expected to have about 119 licenses still available to it in this year and next year. So while the licenses are limited based on the areas in the Bureau of Labor Statistics, the area that DuPage County is in can expect to have licenses available if the county were ever to opt into having this type of use. Next steps going forward, if the county were to if this group were interested in the staff pursuing next steps, we would work through the county development department, the sheriff's office, the health department, and the clerk's office and the finance office to develop a licensing program and land use entitlement through our zoning ordinance. The state statute does give the ability for governments to develop what are called time, place, and manner regulations, and that's a legal phrase that allows local governments to provide regulations that go after compelling government interest. We could regulate whether or not this type of use would be allowed by right or by conditional use. We could regulate the distance requirement that these uses would have to be from protected uses, daycare schools, things like that. Even though the state doesn't have that provision, the county would be able to do that. We found that some counties, in fact, do have distance requirements. Some municipalities have distance requirements from protected uses. It also give the county to regulate typical zoning regulations, setbacks, height, hours of operation, things like that. So if this committee was interested in having the staff review that, what we would do is we would develop these programs with the other disciplines, other agencies in the county, and then ultimately shepherd that through the county development committee, bring that back to finance and county board for further consideration. Madam Chairman.
Great, thank you so much. I'm going to open up to questions. So Member Desart, Member Tortori, Member Ozog, and Member Krajewski.
Thank you, Paul. You always have great presentations, very, very full presentations. The last time we discussed this, I remember that we can only have the possibility of building in unincorporated areas. And I remember the last time we discussed this, there were only like 3, maybe 4 areas in unincorporated DuPage County where we could allow this. So now with the distance requirements eliminated, have you projected how many areas in unincorporated DuPage County are possible for this type of business?
Well, we haven't done a deep dive, but we have approximately 17,000 parcels of land that are non-residential parcels of land. That would be office, commercial, industrial. Now, that didn't take into consideration the fact that some of those parcels are owned by institutions and then floodplain and wetland, but there are a great deal of parcels that would be available. The last time we did this exercise, we did 2 cuts. We did 1,000 feet, that gave us about 13 parcels of land. Then we did 500 feet, that gave us about 357 parcels of land that would be available. So I think a good apples to apples discussion would be if we went down to 500 feet, at the very least, we'd have about 350 to 400 parcels that could be available. And if we went lower than that, we could open it up even more.
Thank you. Member Tortori.
Thank you, Madam Chair. As Chair of Development, I would be happy with my committee to do whatever's necessary to bring any information forward to this county. How the sheriff and the state's attorney would be involved, I'm sure is something we could work out. A couple of questions I had for you, Paul. While the county has opted out of the marijuana ordinance, we still tax marijuana that's sold in the municipality. Is that correct?
I don't know the answer to that. I know that we have adopted the tax that would give us the ability to do it. I don't know the particulars of that. Perhaps the finance department can help.
I guess Jeff's coming up.
We do, and we receive cannabis tax to the state, just as we receive our income tax allotment. In fiscal year 20, we received 51,000. Currently in fiscal 21 year to date, we're at 78,000.
Okay, so we've established that we have taxed marijuana sales in municipalities that are incorporated. Would that tax be at a different rate if we were to have those establishments in unincorporated areas?
That's a good question.
So what we collect is the occupational tax. If we were to tax, if we had a dispensary in DuPage County, unincorporated DuPage County, we would be able to collect the retail sales tax at 3.75%, where municipality collects it at 3%. We don't collect that tax right now. We only collect the occupational tax.
Okay. Second question I had, now that the state has eliminated the distance requirements, if I understand what you told me, you could literally have a dispensary on every corner, so to speak.
There is a distance requirement from dispensary to dispensary, 1,500 feet.
Okay,
So that would be the only prohibition, yes.
okay. But that dispensary could be next to what was otherwise a protected area.
Yes,
But you can't have advertising within 1,000 feet of that protected area.
yes, that's correct.
So could you have a dispensary next to a daycare center as long as there's not a sign that says this is a dispensary next to the daycare center?
Yes, no outside signage.
That makes a lot of sense. I mean, that just seems so absurd to me on its face that I'm not surprised that it passed through the legislature, but it just doesn't make any sense. Thirdly, while the distance limitations have been eliminated, I think you indicated that there's still no reason that we could not impose those limitations at a county level ourselves through our ordinance.
That's correct. And to be clear, the ordinance actually has, the state law has that time, place, manner allowance in it. So yes, we could put distance requirements on these.
So we could, if we wanted to, establish the same limitations that we would have had prior to the change in the state legislation,
Yes,
if we wanted to.
yes,
And-
correct.
and- Okay, thank you. Thank you, Madam Chair.
Thank you. Thank you. Member Ozog, member Krajewski, member Rutledge, then member Renahan.
Thank you for this presentation. To piggyback on top of member Torrentori's questions, can you explain this signage issue a little bit better? You're not allowed to advertise within 1,000 feet of what specifically? Anything?
Protected uses and
Protected uses,
protected
okay.
use under the statute would be any schools
Right.
and any
Take out.
daycare, any type of daycare, facility, home.
So does that actually mean you can't even have any identifying sign on a building? Is it just, you can't even have your nameplate in the window, or what is that?
You can't have any advertising that includes language of marijuana, cannabis, nor any insignia that
Okay,
is a cannabis leaf or something like that.
okay.
You
So,
can do it inside, but nothing on the exterior of the building.
so say your company is called Sunset or whatever, you could have a sign that said Sunset. No logo, no photo of a leaf or any of that sort of thing. But you could at least have a name for your building.
It's my understanding that you can have the name, but
And that's
nothing in
it.
that name could say cannabis, marijuana, or anything similar to that, or any insignia. Any
Within the protected use.
1,000 feet
distance.
within the
Gotcha.
protected use
Okay,
distance.
thank
And
you.
once again, that's on the outside of the building.
Pardon?
have to make sure the kids know that.
That's right, yes.
Member Krajewski, go ahead.
I think you had two questions, and the one, what's our occupational tax, Jeff? Is it 1%? What are we collecting? Yeah, what are we collecting? 1%?
Someone by.
3.75, I believe.
No,
I'm
that's
sorry, that's the retail.
that's the retail. We're collecting right now 1%.
We can get that to you. The retail is 3.75. We don't know what the occupational is, but we'll double check that.
Well, my question, it seems like we only got 80,000 to date. So, I mean, if it's 1%, that's 240,000. If it was 3%, and that's divided by 10 dispensaries in DuPage.
So, oh, you're talking about the occupation.
Yeah,
Yeah.
well, I'm just saying, we're trying to figure out the revenue. If we only got 80,000 to date, we got 10 dispensaries in DuPage.
Well,
It doesn't seem right.
we'll get the numbers on the occupational tax for you.
But even if it's 1%, I mean,
Yeah.
if it would have been 3%, that would be 240,000, but divided by 10, that's 24,000 per dispensary. That's all they're getting.
Yeah, we budgeted 240,000 because last year at this time, we found out that Naperville was opening 3 more dispensaries in the DuPage section in Naperville. So we did think we were going to have more money coming.
It just doesn't seem to add up. It's just if we have 10 dispensaries here they gotta be making a lot more. I mean, they're getting 3%, but whatever our number is, if it's one in that occupational, it doesn't seem like that's corresponding to the 80,000 you've got to date. I mean, that just seems like they're not doing that much.
We might have to dig in.
Yeah, we'll do a dive into that
Sure.
one. One of the things that's important to note is that the part of what may be skewing that is that the two operations in Addison have been going from the beginning in 2019. We only had one in Naperville in 2019. The other ones are relatively new. Lombard, Oak Brook Terrace, those are relatively new.
Okay.
So some of the data is just not in, some of the tax is not in from those yet.
So, and then before we only had like 3 places in the county, so it didn't matter if we did it or didn't do it, because nobody's gonna go to those places anyways, because they're not desirable. And if we go to development, I think what you want to do is we want to craft it in a way to make sure we can allow them to go where they want to go, and they want to be on the major thoroughfares. You look where they opened up, you know, on Westmont's on Ogden Avenue, but they want to be there. So I think we want to draft our ordinance in a way to put them on the arterial highways, because that's the most desirable locations anyways. And I know we talked about, there was one looking to go down in my district on Route 83. But you know, there's residential behind the village unincorporated. They're looking maybe to annex now into another village just so they can do it. But you know, that's where they should be if they're going to be here, is on the major thoroughfares. They want to be where a lot of traffic comes by. I mean, I think we don't want them near the schools or daycares, but they don't want to be there. They want to be on the major intersections with high traffic volume. So we should, if we're going to development, we should craft it in a way to allow them to be on those major, because that's where they want to be. I mean, we could put an ordinance in to allow them, but if it doesn't give them the ability to go in the high traffic areas, they're not going to go there. They're going to find a municipality that's in that area to look at. So I would suggest when we go to development to look at this, that we look to try to bring them into the high traffic areas in the county to give them, because that's where they're going to want to be.
Understood.
Thanks.
Member Tortori, did you want to respond really quick?
Yes,
And Member Martini.
the reason I brought up the tax question is I just would like to know whether or not it's correct that we as the county would make more money from a dispensary in an unincorporated area versus what we would make in an incorporated area in a municipality.
Yes, because now we receive the retail sales tax on that. In addition, we'd have potentially licensing fees, permitting fees, inspection fees on top of the taxes that would be generated from a dispensary.
Okay, now as to how we would craft this at development, I just want to remind everybody that part of the equation that we took a couple of years ago was, if we were going to put this in an unincorporated area, that we also had to take into consideration our neighbors who have placed these dispensaries in the incorporated areas. And now that we have opted out, and many of these dispensaries have chosen to spend tons of money to put their dispensaries in a municipality, I'm not sure that it would be terribly well received if we put one across the street that happened to be unincorporated. We wouldn't be making any friends with that municipality. So that's something I'm sure that our committee is going to take into consideration, which was part of the consideration when we opted out a couple of years ago. And also, I think we got to remember that there's presumably there's a finite number of dollars that are going to be spent on marijuana, though that number continues to grow. And whether you buy it in Naperville or whether you buy it in unincorporated DuPage County, the reality is that every dollar that's spent in a new dispensary in an unincorporated area is probably a dollar that's not going to be spent in an incorporated area. So those are the things I think we have to understand. We've kind of partnered with the municipalities up till now. We've laid out our cards 2 years ago as to what we were doing. Now, if we do an about face, if in fact that's the case, and I'm not against that, we just have to take that into consideration.
Yes, thank you so much, Member Tortori. Member Rutledge?
Thank you, Chairwoman. I just want to clarify that the original intent of the law in the state was for social justice on this. And I think that a lot of these licenses have gone to the mega bucks. And so I don't think we have any say in how these licenses are awarded. And is that the case?
Well, one of the things of the 185 licenses that have been, additional licenses that have been allowed by the state to go through the Department of Financial and Professional Regulation, those are being held up for that very reason, because there are social justice issues that were originally put in the statute that weren't practically adhered to. So I think there's some litigation going on about that specific issue. I don't know whether or not the local jurisdiction has the ability to add on to the social justice statutes and social equity statutes. That's one of the things that we'd be looking at as part of our research. But we know for now, that is something that is holding up the additional licenses in the state to make sure that that is in fact promulgated, those licenses do go to social justice candidates.
Yeah. Thank you for bringing that up,
Thanks, Paul.
Member Rutledge, because I did call Paul yesterday and I asked him the exact same question. And I would like to see, it'd be great if DuPage could be leading that way, right? That we are adhering to the spirit of the legislation. So, and maybe that's something that, Paul and the Development Committee can work on if the board decides to send it back. So thank you. Member Renahan.
Thank you, Madam Chair, and thank you, Paul, for revisiting this issue. I'm sorry if I missed this. You said 295 licenses in the whole state. And I'm just wondering, I guess, potentially in the county, any guesses as, I don't want it to be like a fireworks, as you drive up to Indiana and they're everywhere. I think.
So the way it works is that there are 500 total licenses that are authorized by the state at some point in this whole program. Originally, there were 75 when the state first started. There were 75 licenses that were going to be issued. That number was increased, and the new number of licenses that are available are 185. So in theory, there are a total of 295 licenses that would be available probably by the end of the year. 110 of those are already allotted for. And based on the county's Bureau of Labor Statistics area, there are potentially 119 licenses that will be available in the Chicago, Naperville, Elgin area. DuPage would have to compete for, or potential operators would have to compete for those 119 licenses within that area, Chicago, I should say Cook County, Elgin, and the Naperville area. So it's hard to say how many could actually come to DuPage County because they're competing with several counties in the area. But there are 119 licenses that would be available to compete against.
Thank you. And Member Schwerzy, and then we're going to wrap it up and get a quick consensus because we have to get out because we have our big budget announcement. So Member Schwerzy, go ahead.
Thank you, Madam Chair. My recollection when this law came out in the state a few years ago, a percentage of the sales tax had to be specifically earmarked for law enforcement. Is that still the case?
I believe so, yeah. Yes.
Do you know what the percentage is, or?
I don't. We'll get that to you.
Okay.
We'll get that information to you.
So, all right, thank you all so much for your questions. So I know your favorite part. I'd like to get a consensus if the board, if you can see a show of hands, who wants us to go back to development for reconsideration. Okay, it looks almost unanimous. So great. So Member Tornatore, thank you so much. I appreciate you taking the lead in development and this important issue. And we'll see what you guys come up with. And do we have any new business? Okay, I'll entertain a motion to adjourn. Second by Member Chavez.